As brief intro, the Federal Acquisition Regulations, that's what FAR stands for, FAR. They're the Bible, if you will, for the government when they're doing contracts with anybody. And before we jump into it, just let you know that there are exceptions. Grants are not covered by the FAR, nor are the things what they call other transactional authority acquisitions, OTAs. But even though neither the grants nor the OTAs are covered by the FAR specifically, or at least by regulation, the FAR is extremely useful for the government when they're doing those kind of contracts, either grants or the OTAs, as a reference. So they can include any kind of clauses they want, but what kind of clauses do they know? They only know the FAR. They don't know commercial contracting. They don't know the Uniform Commercial Code. They don't know anything else other than the FAR. So any provisions and clauses that they include in their agreements, whether it's a grant and or a other transactional authority contract, are going to be based on the FAR. So it's important that we understand what that is, what some of the regulations and inclusions, things that are included in the FAR are, and also keep in mind that the purpose of the FAR, a lot of the purpose of the FAR is to provide things that would protect the public interest. In other words, a lot of public policy provisions go into the Federal Acquisition Regulations and the Federal Acquisition Regulations supplements. So a lot of the clauses that we see that we have to flow down, whether it's either in a grant or in a contract to somebody or get flowed down to us, are things that are specific public policy initiatives, such as the drug-free workplace, such as the prohibition on trafficking in people, the prohibition on using certain materials or buying materials from a certain country, working with a certain country. All those things are part of the FAR, but they're put in the FAR because they're implementing public policy provisions that Congress has deemed relevant and important. So with that, we're going to move into the presentation. The regulatory framework, grants are covered by the Uniform Guidance to CFR 2, Part 200. Contracts are governed by the FAR. But it's important, why the FAR is important for us in the grant administration is because everything that we do that's not a grant from the federal government is deemed a contract. Uniform Guidance comes from OMB, talks about everything for the grants, the federal grants primarily. The FAR provides all the rules and procedures for contracting. And that's important because the FAR defines a contract as pretty much anything. The only thing, the unique way the government defines things is a contract is not a grant or a cooperative agreement. But other than that, it's a contract. And if it's a contract under the federal government, then it's subject to the FAR, with the exception of the OTA, which we're not going to really discuss too much, but the other transactional authority. So what is a contract? See, it's pretty much anything to furnish supplies, services, construction, anything. What we deal in a lot are subcontracts, and the FAR defines a subcontract as any contract entered into by a subcontractor. So we get a lot of those. It includes, but it's not limited to things like purchase orders or modifications to purchase orders. The only thing that the FAR provides guidance on, it does not include subawards under a grant. So if there's a subaward versus a subcontract, then the FAR officially doesn't apply. It's not a contract, but as you all know, a lot of provisions in grants are FAR provisions that are public policy things that have to be flowed down. Public policy includes things like terminations, termination for convenience as well. All those are things that are public policy requirements. Contracts and subcontracts. In addition to bilateral instruments, it also includes things like the awards, notice of awards, job orders, things issued like task orders under a basic ordering agreement, BOA, letter contracts. What's a letter contract? It's a contract, but it's in the form of a letter. For example, if we get a notice of award that says, and we get these a lot from private sponsors, they say, congratulations, you're awarded this grant to do whatever, and starts on this date and ends on this date and incorporates a bunch of terms and conditions that we've previously sent you or are attached to the letter. Doesn't say it's a contract, but it is a contract. It also includes things like purchase orders. We get a lot of purchase orders. Those are contracts. And it also includes all the contract modifications. Anything that's bilateral and even the unilateral ones are contracts. But a lot of these agreements are like MOUs, non-disclosure agreements, CRADAs, data use agreements, and material transfer agreements. All these are non-funded, but they are agreements. They are contracts. An MOU, for example, will have a lot of smaller general information. It's not really meant to be a binding contract normally. Same thing with like teaming agreements, which were shown on the previous slide, but didn't really touch on it. Those are basically agreements to agree, but it could include things like payment terms, intellectual property terms, that kind of stuff. So you have to look out for MOUs as being, what is it that's in an MOU? Is it more of a general statement of we're going to work together, or are there some specific terms that are intended to be part of the agreement that ultimately arises out of the agreement to work together? Non-disclosure agreements, every time we talk to anybody outside of about a new project outside of our own university, we need to have a non-disclosure agreement. It's become so common that sometimes people overlook them and don't really understand the importance of a non-disclosure agreement. But especially in the area of research, when you're sharing ideas, not just information, not just, facts, you're sharing ideas as well. It's important to have a non-disclosure agreement because those ideas could develop into something that's very useful and important, could be patented, could be copyrighted, whatever. So it's always important to have a non-disclosure agreement when we're talking with anybody outside of the university. CRADAs, Cooperative Research and Development Agreements, we have a lot of those with the federal laboratories around the country. Teaming agreements, common phrase used in the legal field about teaming agreements is it's an agreement to agree. Data use agreements, we see a lot of those. Same thing with material transfer agreements. We do a lot of material transfer between entities. What's the importance of an MTA? Maintaining your ownership and your ability to handle derivatives of the materials that you are providing. You want to ensure that you limit the use of the materials to what you want it to be used for. Someone asks for something for a specific purpose, and make sure the MTA includes that specific purpose. And then also the rights to publish research. That's very important under an MTA. I'm only kind of dwelling on this a little for a brief moment because I don't think MTAs are viewed as importantly as they should be. A lot of times in universities, especially within A&M, I've done a lot of MTAs where people just say it's not a big deal. We'll just send them the material. We don't really need an agreement, but we really do need the agreements. The MTAs serve a very useful purpose in protecting the university's rights to the material and to the data around the material that they've provided. Again, we talked a little bit about what a contract is, basic elements of any kind of contract. To be legally enforceable is mutual assent. In other words, the parties have agreed with an offer and an acceptance and then consideration. And then you have to have the legal capacity to be enter into a contract. You can't do a contract with a minor, for example. It has to be for a legal purpose. What do we look for in our contracts when you're looking at grant and contract administration? General elements that we deal with on a regular basis at SRS: scope of work, cost and the billing information, what are the deliverables, are there key personnel, and if there are, what are the rules surrounding those key personnel, terminations. What is the term of the contract? What are the termination provisions allowed? We generally like to have mutual termination for convenience provisions in all of our agreements. We want to be able to get out of it if we can't perform from whatever reason. What are the rules regarding publication of the results from our research? And not just publication as in the papers, but what about advertise? What can we say about it? Can we say, yeah, we just received this big award to do this special research for the government? That's publicity. Can we do that or not? We make sure that's in the agreement. Indemnification provisions, we always look for those. Insurance isn't as big of a deal for us from our contract standpoint because we're self-insured. But when we're doing subcontracts to other entities which we don't know their status, having insurance certificates is very important to make sure everybody's protected when our people go out to their facilities or their sites. How do we handle disputes? Needs to be addressed in the agreement, in the contracts. What is the governing law? What law is going to apply? In our case, we always went Texas law, of course. And along with governing law comes the forum. Where would if there was a dispute, where would it be handled? Would it be done in Texas? Would it be done in Brazos County? Would it be done in federal courts? That kind of information needs to be addressed in the contracts as well. And then specifically confidential information. How does that handled? How long is it handled? Does it last beyond the term of the agreement? And if so, for how long? And then finally, the provisions we spend a lot of time on in the university scenario are intellectual property. Who owns the intellectual property? How do you identify it? How long is it protected? Who can use it? Is there a license that goes along with it? And if there is, if we own the property but the sponsor wants to be able to use it for certain purposes, that's a license. We have to address whether we're going to do that or not up front. It's not something you want to be caught with by surprise later. Some of the specific terms I just addressed, publication rights these are things that we have to look at on a regular basis within the university scenario or university settings. Publication rights, term and termination. One of the things that we address as contract negotiators on a regular basis is in the event of a termination, an early termination, what happens to the work that's being done and the money that's been paid and what's up to that point. A lot in commercial contracting, for example, if you get terminated early, you may not get to keep any money. All the money goes back to this the sponsor, just to use the term that we're familiar with. In research, we don't agree to that because we're working towards something that's generally undefined anyway. So as long as we're doing the work that we're supposed to be doing, we expect to be paid for that time that we put into it and allowed to keep that money, even if it's terminated at some point because the sponsor decides we're not making progress the way they wanted it to be made. As long as we're doing what we're supposed to be doing, we get to keep everything we've been paid. So that's why termination provisions are important. Indemnification, talked a little bit about that. Generally, state universities or agencies are prohibited by state law from providing indemnification to another party. That's something we have to look at because everybody always throws in indemnification language to protect them as best they can. Same thing with insurance. We talked about that a little bit. How would disputes be settled? Arbitration, mediation, adjudication. One of the things we don't agree to is binding arbitration. That's something that a lot of people try to get us to agree to, but we can't and we don't. Governing law, we always talk about which laws are going to be provided. One of the options that we like to do is remain silent on governing law, let it be resolved if in the rare event that there is a dispute. Disputes arising under most of our research grants and or contracts, agreements, disputes are not that common, but if it does arise, there is a whole body of law in determining what law would be applied where the venue would be. So, what are the laws governing subcontracts under federal prime contracts? As between the prime contractor and the government, the FAR, uniform guidance, FAR supplements, all those things will be those that what will apply. Between the prime, which say we're the prime contractor from a grant from the government. Between the prime and the government, the FAR applies. Between the prime and all the subcontractors, then you have state or foreign law, foreign contract law that govern. State law can often include things like the Uniform Commercial Code. Every state in the country, all 50 states have a version of the Uniform Commercial Code that they've adopted. Incoterms is an international standard on certain, it's some people refer to it as being similar to the UCC. I've worked under the Incoterms. They're not. It's very restrictive, but it's still a standardized body of law for international contracting, especially European contracting. Then we have state common law decisions and other statutes and regulations. What would be other statutes and regulations? Most states have a regulatory body of law that's similar to the federal acquisition regulations, but only it's for the state. A lot of states have actually adopted almost verbatim, changing some of the words to be applicable to that state. Some of the federal acquisition regulations, specifically the determination for convenience provisions, termination provisions. Most every state has something very similar to that they put in their contracts now because they're the sovereign entity. They want the ability to be able to make these decisions on their own because they're trying to protect their state citizens just as the federal acquisition tries to affect all U.S. citizens, taxpayers. Only a few of these things automatically apply to contracts performed in the U.S. and its territories. Talking about automatically applying, I've had this discussion with people in the past, but just so one of the concepts that might be included in the contract administrator scenario or exams would be the concept of what's called the Christian doctrine. And that's a Supreme Court case from many years ago that basically states that if there's a provision, something along the lines of equal employment, affirmative action, it includes things like the termination for convenience. It includes things like all the provisions I talked about earlier about not dealing with certain foreign government, foreign entities, foreign states, companies from those states, trafficking laws, drug laws, those kind of things. If there are provisions in the FAR that should have been used, should apply to our grant or our subcontract or our contract from the government, then under the Christian doctrine, the courts will say that those provisions are in our contract, whether we actually saw them in our contract or not is irrelevant. They're deemed to be included because they serve a significant public purpose. It's called the Christian doctrine in case that comes up. Other contract elements, we talked about confidential information and intellectual property. What are the things that we look at that we consider red flags when we're reviewing the agreements that we get? Usually ownership of IP is important. As most of you know, when we have an agreement that comes in that where the sponsor says they want to own the intellectual property, patents, any patents that come out of it, they want all those rights, then we have to go through a very comprehensive procedure to get review and approval from the Vice Chancellor for Research. It's not something that we can give up. And it creates lots of issues because if our inventors invent something, then under university policy, they get a certain share of the proceeds if that invention ever has commercial value. So giving up the right to own our intellectual property is not something we do very often. Publications, we have a lot of issues around that because our PIs are also professors, research professors looking for tenure or wanting to maintain their reputation, so they like to publish. Along with publications comes confidentiality because we don't want them and sponsors don't want them to publish something that should have been kept confidential. One another red flag we get is where they say the work has to be done satisfactory to the sponsor. Well, that's a very subjective standard, and we don't want to agree to that. We have a specific statement of work. If we do what the statement of work requires, then that is deemed satisfactory completion, whether it accomplishes what they wanted to accomplish or not. Assumption of risk, liability, there's a lot of different provisions where we've assumed more risk than we normally would like. Those require us as contract negotiators to get the members to understand, make sure they're aware of that risk, the potential liability, and to either accept it or not accept it. Exclusivity, we don't like to agree to exclusivity. That means we want to deal only with one entity, one company, for example. We don't like all that very often. We can't, not going to agree that we will only work with Shell oil, for example. Payment terms, most of you guys know payment terms are always important, whether it's a cost reimbursable agreement where we invoice on a regular basis, usually is monthly, could be quarterly, or if it's a fixed price agreement. Fixed price agreement, when do we get paid? Do we get paid up front, the whole amount, half the amount? Are there milestones included in the agreement? Those are the kind of things we look at. And then, of course, indirect costs. You guys deal with indirect costs on a regular basis, so you know that everyone's always asking if we will waive our IDCs, or if not waive all of it, at least some part of it. So how those indirect costs handled, what can be included. If it's federal government, the rules are very clear on what can be included. But if it's a private sponsor, rules around IDC could be different. So we need to make sure we address that. Some of you are aware of the Government University Industry Research Roundtable, which is now changed to the Philanthropy Research Roundtable. But it's basically industry representatives and university representatives that meet on a regular basis and talk about how we can work together better. There's also something called the University Industry Demonstration Partnership, where we're talking about how we're new approaches to work together. OCI's organizational conflict of interest. That's periodically a big thing in the government. And I say periodically because it depends on, once there's an OCI that's been identified and it winds up creating lots of potential fraud and abuse scenarios, then it becomes something that the government agencies look at very closely for a period of time. It's not usually a problem so much with the universities as it is with private industry, because a lot of private companies will be working with a government agency to help the government design and identify what its needs are. So if I'm a company, and I have been in the past, so I'm a company and our job is to help write a statement of work for the government on a certain specific project that it's trying to accomplish. And then I want to bid on that project. That could create an organizational conflict of interest where I can't write the statement of work without making it biased towards myself. Therefore, I can't bid on it later. That seems pretty straightforward, but it's not as straightforward as you would think when you start dealing with some of the big major defense contractors and other big companies, where one division or one sub-entity within that big corporation, say Lockheed Martin, for example, might provide services to the government and will be working hard with the government to define a statement of work on a new potential project of some sort involving missile commands or something along those lines. And then another section of Lockheed Martin wants to bid on the actual contract to build those things that their other sister division had designed. So it comes up quite often. In the university scenario, it could come up as well because we do a lot of research contracts where we're basically just researching and writing papers. We're providing information to the government of what we think can be accomplished and how to best get there. We're not really into the business of doing production, but under some of the other transactional authority agreements, production is inherent in those contracts. So the design and build there could possibly be an OCI, organizational conflict of interest, arise in those conditions, those scenarios. Go through some of this fairly quickly now, just talking about briefly about the FAR. Again, I told you what it stands for, Federal Acquisition Regulations. It first came about in 1984, Competition and Contracting Act, and provides uniformity for the government. Where do you find the FAR? It's published in the Code of Federal Regulations, Title 48, Chapter 1, includes all the FAR provisions. The other chapters include all the different agency supplements, and including the Civilian Board of Contract Appeals, which is where all contract disputes are resolved. The majority of contract disputes are resolved between the government and their contractors. And then also the cost accounting standards are included in Title 48 as well. Cost accounting standards, for those of you not familiar with, from a contract administrator perspective, that's where you look to see what costs are allowed, what's allowable, what's allocable, and what's reasonable. It has to be all three of those in order to be a valid cost that can be reimbursed by the government. Some of the subchapters in the FAR, parts 1 through 4 are just general information. The important part is part 2, which is all the definitions. Competition is all part 5. It used to be part 5 only, but now it's up through part 12, which part 12 includes commercial contracting. It's commercial items now is what it's called, and acquisition planning. The different types of contracting methods and types are in part 13 through 18, primarily part 16, which is the types of contracts and talks about negotiated procurements. All the socioeconomic programs are in parts 19 through 26. Things like small business 8A, hub zone, veteran owns, disabled veteran programs, all these different socioeconomic programs that aren't, that's not anything in the commercial contracting law. It's strictly public policy, things that federal government has decided it should do in order to affect some sort of socioeconomic policy that it wants to, that it feels is important for the country. General contracting requirements, Part 27 through 33, such as the cost principles and other kind of stuff like that. 35, 34 through 41 is special categories. The one that we're most concerned about is Part 35, which is R&D contracting. And then subcontracting provisions are at Part 44, and government property is at Part 45. All these are the ones that we deal with on a regular basis. And then all the clauses are Part 52. Most of you seen FAR 52 point something. That will be the clause. The first part of it will be the reference to the FAR itself, which talks about the clause, and then the dash whatever will be the actual clause that it is, and you can get that from the FAR. And then also some certain forms that are available in the appendix and part of the index for the FAR. Here's a summary of that. When you're looking at the FAR and you see the references, see something that says a clause 52.246. 246 is going to be where the The information's found in the FAR, Part 46, for example. Two is going to mean often the DFARS provision. 252 would be the DFARS, for example. But every letter or every combination of letters has a reference. So you have the prescription 46.309, which talks about R&D contracts, and then the clause that's referenced is 52.246-9. That's what this clause is. That's the clause that goes into the government, into the contract. Research and development clauses. Our job that we do, and we are trying to use AI in the near future to to do this task for us, is to review all the contracts to make sure that the clauses that are referenced or included in their entirety are the right contract, the right clauses for that contract. Under R&D Part 35, it says you use contracts only when they're to buy supplies or services for the direct benefit of the governments, as opposed to grants or cooperative agreements, which are used when it's really to support, stimulate, or support research. Cost sharing, you guys are probably way too familiar with cost sharing. Agency supplements, every agency has a supplement. All the supplements are more restrictive generally than the FAR. For example, a common DFAR supplemental provision that as a industry general counsel I've had to deal with numerous times would be restrictions on certain materials that nuts and bolts couldn't include certain type of metal for whatever reason. And if you didn't know to look for that provision, you wouldn't know that it was even an issue. And some of those restrictions can be very expensive. And one of the scenarios I had, we used to buy a certain type of screws for a product we were making for the Army and the Marine Corps that were, say 10 for a penny, buying them in bulk. When the DFARS provision was pointed out to us as something we had to comply with, it was a new provision that came about. We had to apply it going forward. Those same screws that were getting 10 for a penny were now 15 cents a piece. Big difference in cost. So some of those can be very significant, what you can find in the different sub agency supplements. Another big issue in the federal government contracting arena is the difference between authority. For the government, only what's called a contracting officer, which is somebody that's had specialized training and has been given us what they call a warrant, which is a letter authorizing that person to sign contracts or modifications up to a a specific value. Generally, in most smaller or organizations like at a fort, like Fort Hood, for example, the contracting officer at Fort Hood might have authority to award contracts up to $50 million. Anything above that goes up to a higher level, and it can even go down lower as well. But within the government, the only person that can bind the government is a contracting officer. Most litigation that I've been involved in over the years in private companies deals with the companies listening to somebody other than a contracting officer telling them what to do. Yes, that's the government, a government representative, but if it's not a contracting officer, they can't sign it. Specifically, the COTR, contracting officer technical representative, they can tell you things to do, but they can't tell you to do something that's not already in the contract. So if they have a change that causes more money to be required, only the contracting officer can make that kind of a decision. And then finally, we're going to kind of cover some types of contracts. The fixed price, cost reimbursement. Not going to spend a lot of time on that. I think everybody understands what the difference are for those. IDIQ contracts. I just saw an IDIQ contract proposed, came through our office recently, where the amount the maximum amount of the IDIQ contract was $100 billion plus, but the minimum on the IDIQ, that same IDIQ contract was $500. So even though it looks like it's a huge contract, it's indefinite delivery and indefinite quantity means just what it says. So the government can order a whole bunch of something, or can order a required minimum. And in this particular contract, the minimum was only $500. Time and materials, we don't do very much of those because universities aren't very good at keeping track of their time. Prohibited cost plus percentage of cost, those are prohibited. So we have the federal contracting process. Talked a little bit about that. There's a standardized form, and the FAR provides this. Standard Form 33. Remember, I talked about the forms at the end of the FAR in the appendix. And all government agencies use this SF 43 with certain specific provisions, and all of them are the same. Now, that's good in one sense, but it's bad in another sense because what happens for all the government agencies is they use the same form. They just grab one that they used in the past and they send it out as an RFP to somebody. And it's got all the different clauses that may or may not be relevant. And we spend all of our time trying to go through all these different clauses to say, well, this one shouldn't apply to us. This one should apply. This one needs to be modified. That's the only problem with the standardized form is the government uses one big form with everything. And sometimes that's valid, sometimes it's not. But again, the government's position routinely is if it doesn't apply, it doesn't apply, so don't worry about it. We do worry about it because if it's there and it doesn't apply, we're still concerned that they may try to make it apply. But that's a constant battle that contract negotiators have to fight with the different sponsors. The award, that's when that's what should be the actual clauses that do apply. Sometimes it is, sometimes it isn't, but it's always going to have the certain information about the contract administration. There's a uniform contract format FAR provides. This is what I talked about, the different information. Always going to have the schedule. Always going to have this part A is going to be the solicitation, supplies, markings, statement of work is always going to be in part C. Um, Inspection acceptance is always going to be in E. Special contracts or contract requirements are going to be part H. So it's always going to be in the same way in every contract. Same thing with the reps, list of documents, etc. These contract clauses are always going to be standard. Things that we look for the university, for when you're talking about the research administration, the right to publish, the right to retain title to our intellectual property, the right to keep property and equipment that we buy under the grants. We also always want to make sure on the use of foreign nationals, because we have a lot of faculty and students which are foreign nationals, make sure they're not prohibited, that they are specifically allowed. Most of the FAR Part 31 cost principles are incorporated in the OMB uniform guidance. So there's not much change. There's really not a difference in that. We always worry about limitation of cost, limitation of funds. There's a government always has a clause that talks about subject to availability of funds. This is to say that this work is funded by a government appropriated money, and if there's no money appropriated, such in the case of a current budget or a government shutdown because no budgets have been approved, then the government's not obligated to continue doing any work, and we're not allowed to complain about it. That's the sovereign act of the government. Government property, we look at these clauses. Most of you probably know that rarely does the government ever want its property back, but it could. And we have to look at these clauses to make sure we understand what that means. Some of the FAR 52 clauses we look at, an important patent rights, very important. Bayh-Dole, all know about that. And then also the rights and data, cost accounting standards, etc. Special provisions, special clauses apply to universities. Government data rights, we look at that a lot. It's It's a an important concept within the government. The government expects us to provide things to them with enough technical data, enough information that they can use it for the purposes that they wanted to use it. We talked a little bit about what's called government unlimited rights. What the government generally really wants is just government purpose rights. It means the rights to use the information without restriction inside the government and outside the government for a government purpose. What does that mean? They want to be able to give that information, the data, share that data with another contractor who's going to be building something for them at a lower cost and not have to worry about it being proprietary information that they can't share with somebody else. Limited rights, sometimes we get, that's when it only can be used within the government. All these things have to be addressed up front. You can't, it's not going to be able to change them after the contract's been awarded. That's why we spend a lot of time looking at these clauses, even though most of us, myself included, don't understand everything that's in them because they're very, very comprehensive and very technical. But it's important that we do understand as best we can because these things are not changeable later. If they are changeable, if they are something that need to be changed, it comes at a high cost for both parties. We talked about termination for convenience clause. Termination for convenience is a concept that really only applies to sovereign entities like the government, although there are a lot of commercial entities nowadays that are using a version of the termination for convenience in their contracts. That's something they have to agree to. One of the things that I know we do periodically are small disadvantaged business subcontracting plans. We don't do them within SRS, but I know that the members have to do them, and they can be very complicated. There's different goals and objectives, but basically it just, for those of you who are not familiar with the subcontracting plan, it just says that we will provide 30% of our contract value to small businesses. Small businesses have a very clear definition. So these are all the provisions that are in a subcontracting plan. Troublesome clauses that we look at, liquidated damages, not used very often, but every once in a while we'll see a reference to a liquidated damage provision that we have to address. Commercial items, FAR Part 12, a lot of different clauses in there that we have to look at and change. Those terms and conditions are different for commercial items, but they're troublesome for us because oftentimes everything is viewed as a commercial item rather than a research item. And that's when we have to make sure that's very clear up front. Indemnity clauses, again, we don't like any of those. We don't agree ever to interest repayments. And certainly disputes, there's a lot of issues, differences of opinion versus dispute. So we try to make sure that the disputes clauses are very specific for us. DFAR clauses that we look at, disclosure of information, drug-free workplace, those things are all there. One that's very common nowadays is the unclassified information. So it's not classified, but it's protected, and trying to make sure that the UIC stuff is addressed appropriately and that our university information systems manage it in accordance with the federal requirements is something that we always have to look at. Cyber incident reporting. I'm not going to go over this very much because it's not that relevant to most of us, but businesses and universities at the university level, this is a big deal. There's lots of what's called the National Institute of Standards and Technology requirements that are being imposed by the government at all levels, especially at the Defense Department level, and it's constantly changing. So it's something that we don't have to look at necessarily if at our level at SRS, but that the university is looking at a higher level at the compliance office, for example, and the IT office to make sure that they're always in compliance with these different requirements. Talked a little bit about controlled unclassified information. We do that a lot as well. Security clearances. I don't know anybody whether we get into that very much, but there is a university, certain organizations within the university have facility security clearances, and if there is confidential or classified work being done, then all these things apply. And it's a DD Form 254 issued by the government to the individual entity, like the university, that says these people, this work is classified and this is what you can and cannot do. Talked a little bit about subcontract requirements, different types of subcontracts, fixed price, cost reimbursement. Normally, we do everything on a cost reimbursement basis. None of this is particularly important other than just looking at it from a government standpoint. Flow down requirements is what is important. I want to cover that real quickly. There are specific clauses that are required to be flown down from the government, and the government sets that out from between them and the prime. The prime then flows them down to us, or we flow them down to our subcontractors based on what the prime has told us to do. That's important because a lot of times, as when we're a subcontractor, we get the subcontract from the prime contractor. The first thing they will state is all these provisions are required, mandatory, and cannot be negotiated, period. So we have to look at that, and sometimes we agree that they cannot be negotiated, but not always. Specific ones you can see here. Some of the non-mandatory that are necessary, but we always do are the termination clauses, changes, substitution nomenclature. When we talk about different things, these are what the words mean. So a contract means a subcontract, contractor means subcontractor, et cetera. That's what that substitution nomenclature means. And then finally, we'll talk about reps and certs. Those are constantly maintained in our SAM registration, but sometimes we get separate reps and cert requirements from our different clauses, different contractors, and we have to fill them out separately. We're not really a for-profit subcontractor, so we don't worry too much about these.